Everyone is talking about the war in Iran, but I know that you want to know what it means for your portfolio. Oil isn't just going up. It could break the system and kill the prospect of more rate cuts and stimulus for the global economy. Stocks, they're vulnerable because the decision to close one narrow strait might be the most expensive move of the decade. Rate cuts, they're off the table. And the stock market, it's on the brink. The war in Iran has escalated. And this is not just a regional conflict anymore. This is the kind of event that could reshape financial markets. The kind that hits your portfolio, your wallet, and even the price you pay at the pump next week, especially if these things escalate. Let's break down exactly what's happening and what it means for oil, stocks, Forex, inflation, and the future of the U.S. economy. But hey, before we go any further, make sure you hit the subscribe button and turn on the notifications because this is an evolving story. And I'll do my best to keep you all updated with our live streams and our shorts. So make sure you subscribe. And I don't want you to trade blind, and make sure you stay ahead of these developments with us. Let's start with the Strait of Hormuz. It's only about 20 miles wide at its narrowest point, but don't let that size fool you. Roughly 20% of the world's oil supply flows through this narrow channel every single day. That's over 20 billion barrels of oil crossing a strip of ocean that's now at the center of the global crisis. Following the U.S. military strikes on Iran, Iran's parliament voted to close the Strait of Hormuz for the first time since 1972. It still needs to be approved, though, by Iran's Supreme National Council and its supreme leader. But if it does, this move could block $1 billion of daily oil shipments, instantly cutting off vital exports from Kuwait, Iraq, Qatar, and Saudi Arabia, not just Iran. And that's why 50 oil tankers began scrambling immediately to leave the area after the strikes. And markets are just beginning to respond. Prices are just beginning to move. We're not talking about oil reaching 100. That's, almost definitely going to happen. We're talking about 120, 130, 140, 150 if the conflict drags on. That's what some of the biggest banks are forecasting. And if a prolonged disruption occurs, we could see oil as high as $150 or even $200 a barrel. The U.S. economy isn't immune. You might think that the U.S. is safe because it imports oil mostly from Canada or its own domestic sources. But that's not how global oil pricing works. Higher global oil prices raises costs across the board, from gasoline to shipping to food and airline tickets. According to the Fed, every $10 increase in oil prices adds 0.2 percentage points to CPI inflation. Oil is already up $20 since April, and the market hasn't even fully reacted to the impact of inflation yet. If this Strait of Hormuz closure goes through, U.S. inflation could shoot back up to 5% or higher by the summer. And here's the kicker. The Fed can't cut interest rates into a spike in inflation. Just weeks ago, the market was pricing in 2 or even 3 rate cuts this year. Now, maybe 1 or even that is looking less likely by the day. So what does this really mean for stocks? Broadly, volatility and risk off. Airlines and transport stocks are already under pressure. Manufacturers, retailers like Toyota and Walmart are bracing for higher costs. Refineries and petrochemical firms, they're going to face margin squeezes. And crypto and speculative tech, that's going to see sharp sell-offs as well. We have seen indexes like S&P, FTSE, Nikkei, all vulnerable to steep pullbacks, either from a reduced chance of rate cut or just uncertainty and risk aversion. Deutsche Bank warns that oil above $120 could trigger a stagflationary downturn like 1973, 90, or 2022. Even U.S. shale producers like Chevron and ExxonMobil, while they could benefit initially, could face rising costs and logistical constraints in the long run. So it's pain for everyone, not just the U.S. Even countries like China, India, Japan, and South Korea, they get most of their oil through the Strait of Hormuz. And China is Iran's top oil customer, and they would be hit hard from the flow. So don't be mistaken. They're going to be thinking about a reaction as well. So Asia, all of these countries, Middle East, will face an energy crisis, further slowing their growth and global growth. And meanwhile, Russia is adding fuel to the fire with claims that Russia and other countries are prepared to supply Iran with nuclear warheads, a move that could escalate this into a far wider conflict. This has serious geopolitical risks and heightens market uncertainty. It also bolsters Russia's own energy revenue as prices soar, while destabilizing global order. But let's talk safe havens and currency moves. So where's the money going? Gold is a possibility. It's not really rallying too much, but the US dollar is really surging as a safe haven play. So we can expect more action like this in the Forex market. Eurodollar could bounce at any signs of de-escalation. The yen is tricky because safe haven flows are often offset by oil price inflation risk. But the dollar could see mixed moves, spiking on fear but vulnerable to inflation and related weakness. If the ECB pauses rate cuts because of rising energy prices, the euro could hold up better than expected. So from a historical perspective, there are some things that we can point to. Even in past flare-ups like 1980's tanker war, the Strait of Hormuz was never fully closed. Western navies, including the U.S. Fifth Fleet, are already patrolling the area. Saudi Arabia and the UAE do have pipelines that can bypass the strait, but their combined rerouting capacity is limited to only 6.5 to 7.5 million barrels per day, which leaves a massive 13% global shortfall. Even if the closure is short-lived, the damage to markets, inflation, and sentiment could last for months. So the main takeaways here is that oil could blow past $100, U.S. inflation is set to spike, rate cuts are coming off the table, stocks and crypto are facing significant downside risk, and this conflict is now a full-blown economic crisis, not just a military one. This is what happens when geopolitics and energy collide. And the question now is, will Iran's supreme leader follow through? Will oil hit $150 a barrel? Will central banks be forced to reverse course? I want to know what you think about all this, so tell me in the comments below. My goal is to help you learn, prepare, and trade headline-driven markets like this every single week. So if you haven't done so already, make sure you subscribe. We're tracking this story day by day in real time. Stay sharp, stay safe, and I will see you in the next video.